No long intro. Sugar 11 Mega Trade. Now, this one's a really good one because for the past 2 weeks or so, I've been keeping tabs on these markets in hopes of building a model around them for future trades. So, of course, like you guys know, I really like seasonal tendencies, and especially when it comes to commodities markets, these work really well. I originally started to implement seasonal tendencies about last year, and it was mainly based around commodities. I didn't really think about using them when it comes to the forex markets, although they are as effective, but more effective when it comes to commodities. So, for Sugar 11, the model I'm thinking about is mainly based around seasonal tendency, a premium market, which ICT did a video on this. It's called premium market versus carrying charge market, and I'll actually talk about it a little bit. And we have the commitment of traders report, where I've been collecting data from them, mainly the non-commercials, and what they've been doing, what what they're buying, how much they're buying, what they're selling, and all things like that. And I also have open interest, which I'll be adding to the model itself. Although it's not on here, but open interest is one of the ones I'm actually planning on implementing when it comes to catching these mega trades. So, for the seasonal tendency itself, let's actually take a look at the chart. Here it is. So, you can see there's a tendency for a January to February high, but that's not the one I'm interested in though. I don't really want to be in here throughout this. I'm not trying to short it in here. This is not clean enough for me. But what is though is the August low, but mainly the September low. And when we take a look at the charts after this, let's see. This move, this parabolic move, this is the one I'm looking to capture from here on out. So when I'm done building the flow chart, I'm not sure if I'm willing to share it with you guys yet, but I'll probably post it on my community tab or so. Not sure, but this is what I'll be looking for. Second week of September, once I'm done with the flow chart next year, this is something I'll be eyeing to catch. Usually, I think I'll be looking for the swing high to be taken, the most recent swing high. And let's actually look at one of the charts I marked up. So here it is. So this was about maybe a month ago. Yes. So this was a month ago when I was marking up these charts. Very curious to how it would play out. And markets took out sell side liquidity, and it did so right in September, forming that September low we've been anticipating when it comes to the seasonal tendency, as you can see here, which was really exciting for me because I was really curious to see how this would play out. And it did so, and it consolidated for a bit. And then we have these two down close candles, and then the nice expansion to the upside, which of course creates your classic order block. And now, for a lot of you guys, a retracement into this order block, if you were to draw a fib in here, you'd probably find the 79% retracement level, which a lot of us know as the optimal trade entry. Not a big fan, never really used it, but if it works, it works. So some of you that do like optimal trade entry, this would be one. And I actually think I did draw it up just to make sure it lined up, and it lined up perfectly. So I took this screenshot beforehand because I wanted to see, would this actually work? Because the PD arrays themselves is telling me these markets are set to go higher. But when I have the seasonal tendencies lined up, and then the markets are in a premium already, on the commercial side, and also open interest was also a good confluence. So this is what this purple line is right here. And I like the fact that there was a break in market structure up here. So it took out this short-term swing high, and then it was retracing back here. And later throughout the video, we'll actually take a look at what transpired here. So let's return back to our mind map. So here's the seasonal tendency we want to use. The January and February high, although you could use it, but I think the September low is what's really interesting for me. That big move up, that parabolic move to the upside, that's the one I'm looking for. So I'll be looking for this probably next September also. And throughout this time, I'll have a lot of time on my hands to actually create a whole model around these markets and that seasonal tendency itself. And now, for the premium market that I mentioned, ICT talks about this. Some of you that may be curious, he says that it means that there's something fundamentally strong about that particular commodity. The demand is high and the supply is short. Now, meaning when the nearby contract is worth more than the next month's out, it means that the commercials are willing to pay a premium for a certain commodity right now, because they understand that the demand is high and the supply is short. So they want to get their hands on whatever commodity we're talking about quickly. They're not willing to wait 2 months out or 3 months out to buy it, because chances are if they wait, it'll probably be worth a lot more. So they're willing to pay a premium for it right now. And let's actually take a look. So this is an example of carrying charge market. This is what most commodities will look like. So this is the December contract, which is the nearby contract. So you see this is the cash. Don't really pay attention to this, but this is the one. It's worth less than the next month's out if you look here. So this is a regular when it comes to commodities. This isn't what we're talking about. For a market to have a premium, we want to see the nearby contract to be worth more than the next month out. So these two contracts, we want to see the first one worth more and the latter less. So let's actually take a look at sugar itself. Here it is. So cash market shows up first, but look, this is the nearby contract worth $19.94. In the next month out, $18.96. So this one is worth more than the next month's out. So we want to see the nearby contracts worth more than the next month out. And questions I did ask myself is, let's say if we don't see a premium market, does that mean the commodity won't go up if the seasonal tendency says so? Well, ICT says it's not a fact. It's the markets can still go up. They can still do whatever they want seasonally, even if there isn't a premium market. So this isn't an end all be all. If you don't see this, doesn't mean you can't trade, but it simply means that when you do see a market that develops a premium like this, there's a big chance for a commercial bull run. A commercial bull run, as ICT refers to it, is when you have a big parabolic move because the commercials are involved. That's deep money. They have really deep pockets. And that's actually what drew me to these markets themselves. This doesn't happen by chance. It simply doesn't. And let's actually take a look at the charts. If you guys remember what we marked up beforehand, we're anticipating market to retrace into this order block and then head higher. Now let's look. I mean, look at this. This is what ICT refers to as a parabolic move. I mean, this is insane. The markets barely even took a breath here. These things, they've been going higher since the minute I drew this thing. 2 days later, it traded into the order block. And every week I would check up on it. I would look at the charts on Saturdays. And this thing was just going higher and higher. Took out this swing high here. Took this out. And we do have this high up here. I'm not completely convinced it will take this out. And one of the reasons why is because of open interest. Although open interest isn't the main premise of today's video, but I think it's something you all should probably take a look at from time to time. Put this on a weekly chart. Because open interest is starting to drop here. And as you know, ICT mentions that when the markets are going higher, for the move to keep fueling, to keep going higher, you want to see open interest to keep increasing also. So when I'm seeing open interest starting to drop here, this isn't necessarily a good sign. In most cases, it's probably going to slow it down. Whether or not it wants to trade into this liquidity void or even into the order block in here and then head higher remains to be seen, but I'm not sure. But these markets, man, here's the September low, creating that order block, taking out sell side liquidity, breaking market structure, retracement to the order block, and if you're to draw a fib, a 79% retracement level, optimal trade entry. And it's a premium market overlapping the seasonal tendency, and these things just took off. Now this gives me a lot of hope, when I start to implement, some of my new concepts when I acquired them, and to see them play out like this certainly does bring, I suppose, joy to me, because it makes it so much sweeter to see that these things actually do work. And for the KOT report, I didn't even really have to implement this, because the PD arrays, the seasonal tendency, the premium market, everything else already lined up for sugar to go up. I didn't even have to check up on whether or not, let's say, whether or not the non-commercials were buying this. So this is some of my data when it comes to non-commercials and what they're buying and selling and things of that nature. And we won't get to go deeper into my KOT report, mainly because we don't have to. But this seasonal tendency it's a really good one, guys. So I did want to share that with you. And I'll leave the link for the Telegram chat where you can actually find all these seasonal tendency charts yourselves in case you're curious. From currencies, indices, forex, the softs, grains, all of them. You'll find all of them there. So do take a look and be respectful. Don't abuse it, of course. And that's about it for today's video. So sugar 11, guys, a mega trade. And I didn't get into how many if I had bought one contract, how much money I would have made. We're not really into wishful thinking. So next year, I'll certainly have their data and that these markets enabled in my AMP futures account. That way, I can definitely enter a position or buy a couple contracts if this opportunity shows up again. So, with all that being said, I'll also link the premium versus carrying charge market core content video in the description box so you can actually watch that and understand exactly what I'm talking about. Because I don't think I did this justice. This is really good when it comes to trading commodities. That video will definitely help you understand what I'm talking about. So, I hope you guys have a wonderful day and good trading. And do be careful out there. The market's been acting funny this week. And I am also anticipating a large range day tomorrow, which will be Friday. We've been consolidating for a few days now. So hopefully I catch something in London and we can actually pass my phase 2 verification. And I'll keep you guys updated on that. So good day and see you guys soon.